The S&P sold off about 1.6%, almost 1.7% yesterday in regular trading. And after hours, you sold off another 0.3%. This is starting to look pretty ugly. Tesla stock fell almost 9% yesterday while recovering 0.37% in after hours. Here in this video, I will go over all of your Tesla stock news, what happened yesterday, and what could be coming next. First and foremost, for anyone that does not know, let me explain definitively what happened yesterday. And it's actually pretty simple. The unemployment rate fell, but only 0.03%. The jobs report missed on the headline. If you consider the rounding of the unemployment rate technically went from 4.26%, which gets rounded up to 4.3%, down to 4.22%, which then gets rounded down to 4.2%. So the unemployment rate, if you consider the rounding, went down to 4.2%, but it really didn't move too much, whereas the jobs report came in about 20,000 lower than expected. So this was actually not a good jobs report that we got, and I think markets were decisively looking for a good jobs report, something that said we're heading into the first Fed cut with economic strength, with labor market strength. We're not heading into a recession, and that's not what we got. Now, we didn't get super recessionary data. That could have led to a 5 to 7%, move lower, in my personal opinion. Like if the unemployment rate were to have jumped a lot like it did the prior month. That didn't happen, but we didn't get that big win that markets were expecting. And when you mix in there September seasonality, which September tends to be the worst month for equities over the past 10 years, by far, with an average return of almost 3% negative, you get this negative market reaction based on not terrible data, but not great data, kind of slight misses. You also had some Fed comments yesterday from Fed Waller talking about front-loading rate cuts if the economy gets worse, and, well, kind of eerie comments that maybe the economic situation is going to get worse. And I think that did spook some investors also. And from the prospects of going forward in our markets, there's just a lot of things that are working against us right now. We have very high expectations and valuations. Earnings estimates are still at their all-time highs for 2025. If the economy weakens, it's going to be hard for markets to meet those expectations. And as we get closer to starting Q3 earnings season, which will start in October, I think a lot of Wall Street may be disappointed. And I think you're starting to get some of that, hey, could we be disappointed soon from earnings, priced into markets. You also have, as I mentioned, the historically weak September, which looks like it's almost a self-fulfilling prophecy. And you have the election, which, whether you're for T-Man or for Camilla, whether it's 10% plus tariffs, that's not necessarily great for economic activity in the near term, or whether it is a higher corporate tax rate or taxing unrealized gains and unrealized losses. I mean, that's not exactly something that's going to be great for markets either. That hasn't been reflected in equities yet, and you could start to see some of that priced into markets in September or October. You also have the Fed that is going to start cutting rates September 18th. And a lot of people, a lot of folks on Wall Street are saying you should sell the first cut, including Bank of America and many well-respected firms. So with all of these things going on that are negative, markets really needed a decisively positive jobs report, in which I would say it was more negative than positive, like a lot more negative than positive. Because again, you missed on the job creation, the headline number, about 20,000 jobs. If you consider the revisions, I mean, you're like, 60, 80,000 jobs, maybe, for last month. That's not good. That's not what I would call a decisively positive jobs report. Austin Goldsby said this in an interview Friday. Quote, "If you're going to have a soft landing, you can't be behind the curve. It's very clear what's happening in the economy. Inflation is way down, we're not overheating, and there are definite warning signs of things overcooling." And Apollo said as well over this weekend, quote, "This is a soft landing. The U.S. economy is not in a recession, and there are no signs of a recession on the horizon." I mean, that's troubling to hear firms like Apollo say there's no signs of a recession on the horizon, when in fact the signs are everywhere. Literally everywhere. Just point out a data point, and odds are it looks recessionary, or at least the start of a recession. There's a lot of complacency in our markets, and that could grow to be quite a problem, because markets are all based on, what's coming next, on pricing things in. So as markets go lower, we price in more bad news. But as people remain complacent and unwilling to acknowledge some things that are going on in the economy, that does potentially lead to more downside. It's kind of like, if everyone's bullish, then it's hard to see the upside case. If everyone's bearish, that's usually a time to be buying the dip. That's usually when all of the bad news is priced in. But from my perspective here, there can still be a lot of bad news to be priced in. Now, as far as Tesla stock, as Tesla stock investors, which I'm going to assume you are, Tesla is going to have a high beta to whatever the markets do. So it's going to do really well when times are good. It's going to do really bad when times are bad. And we seen that on Friday. Tesla was down almost 9%, about 8.45%. Did recover a little bit in after hours, up 0.37%. It's unfortunate because if this jobs report was really good, this could have been the thing that caused the September rally into October 10th. I think it's going to be pretty hard to get a, pre-event rally for Tesla from here until October 10th. I don't think any other data is as important as the BLS jobs report that we got on Friday. So even if we do get good data with, certain things, and we'll take a look at the calendar here in just a moment, it's going to be hard to justify a massive rally in markets because the jobs report was negative. Is it impossible to do so? Absolutely not. But you also have the mentality of sell the first cut from the Fed, and it wouldn't surprise me if that's actually what we see. So I just don't see many macro catalysts here to push markets higher. Now, Tesla stock can do its own thing, and from time to time, Tesla stock can do well as the markets do not, but that doesn't happen all of the time. And if we were to base some statistical probabilities on this, if markets fall, there's probably a 90% chance Tesla just goes with it, even though we have this robotaxi event on October 10th, and that may not be placed in or accurately reflected in Tesla stock, meaning I think Tesla should be higher than where it is today at around $211 per share. I think if we get the first robotaxi ride, which it's what it's going to look like on October 10th, I think Wall Street's going to be caught off guard by that. I think Tesla stock should go higher on that. But if the markets are not in a good place, then it's going to be hard for Tesla to do that. Not impossible, but the odds will be stacked against us. So you can look at this from the glass half empty or glass half full approach. The good part about this is if the markets do not recognize the progress of Tesla, the fact that FSD is about to enter the Chinese and European markets in Q1 of 2025, that we could be closer than ever to the robotaxi network, as we may or may not enter into a recession. The bull case is we don't enter a recession. The Fed starts to cut rates. Demand picks up for Tesla. Tesla has to buy down less interest rate, and Tesla could become more profitable than we've ever seen. And if Wall Street doesn't realize that, and Tesla stock sells off alongside the broader markets, and boom, next thing you know, you're $180 again, $170, $160 again, assuming the markets sell off a lot more from here, then you're buying Tesla with obviously a big discount to where the stock is today. But you're buying a much better Tesla than you were a year ago, or 2 years ago, or 3 or 4 years ago. You're buying the best Tesla ever at, ridiculously cheap valuations, in my personal opinion. That's assuming Tesla stock falls further from here. I do think Tesla is a very attractive buy at these levels. But unfortunately, I do think markets are going to fall, and I think that will probably take Tesla with it. If you're like me, you're actually hoping Tesla stock falls further so we can get the best price possible, because I know a lot of people don't like it when I say this, but you actually make money when you buy a stock, not when you sell a stock. Now, of course, stock can go up, it can go down, but you make money on the buy, just like on a home, right? Or anything. If you buy it at the wrong price, you're never going to make money on it. If you buy it at the right price, eventually you'll make money on it. Just like a stock, if you bought Cisco back in 2000, you still have not made money on that. But if you bought it 2 years prior, then you're still up thousands of percents. Okay, so that's kind of the point that I'm making. The lower Tesla stock goes, the more money you are ultimately going to make. And then whether or not we ultimately enter into a recession or the data gets worse, that will dictate where Tesla stock can ultimately go. In the month of September, I would not be surprised if Tesla stock gets down to the 180 to 160 level. Anything under that would be very extreme, in my personal opinion. That would be, markets probably down 15, 20 plus percent, which I wouldn't say is necessarily a base case at this point. But if the economic data does get worse, then I ultimately see Tesla stock falling back to about that $100 level. I think the odds of that are on the smaller side, probably 20%, 15% chance that we get down to $100 per share, that we fall 50% from here. But that would really be some recession fears starting to ramp up in markets, in which every single piece of economic data will be heavily scrutinized. On Monday, we have wholesale inventories month over month. That's really not going to be important for broader markets. On Tuesday, you don't have anything. On Wednesday, you have core CPI expecting 0.2%. For your month over month. Year over year expected to stay the same at 3.2%. Headline month over month expected at 0.2%. And year over year is expected to fall a lot, from 2.9% down to 2.6%. So that's on Wednesday. On Thursday, you have PPI month over month, expecting that at 0.2%. And that's pretty much it. Friday, you have Michigan consumer sentiment, expecting that to come in at 68. So a little bit better, one tick up from last month. So we really don't have any economic data for next week besides CPI, PPI. And if you want to call this economic data, Michigan consumer sentiment, yeah, markets react to it, but it's a survey. It can be kind of wishy-washy. And that's kind of one of the issues that I see in the very near terms coming off of this bad jobs report, this mentality of you should sell the first Fed cut. We don't really have any economic data that could come out and show the economy is strong. The economy is doing okay for this upcoming week, and that makes me a little bit nervous for what the price action could bring. That's why I'm just not very bullish in the near term. I'm not very bullish on broader markets. I'm bullish on the prospects of Tesla as long as the broad markets play along, but I don't think they're going to. So that means I'm not very bullish on Tesla stock in the immediate term as well. If Tesla stock sells off from here heading into October 10th, then I do think we get a ferocious rally after the Robotaxi event, and that is an event I would be bullish on at that time. But then again, we may be pricing in some election uncertainties, some election risk, and I don't think the markets are going to be in a good place in October either. And hey, I know a lot of people, a lot of Uber bulls, they're not going to like this perspective, and that's just fine. I make these videos for people with open opinions, for people that want opinions, that want to make as much money as possible. And sometimes the markets are just in a bad place, and it doesn't matter what's going on with Tesla. Again, I think Tesla should be a lot higher than where it is today. But if the markets are in a bad place, that's likely going to mean Tesla's in a bad place as well. As far as Tesla stock news today, we really don't have too much. Shaq has taken delivery of his second Tesla Cybertruck. This thing looks badass. Custom wheels. You got the light bar underneath with the that's not matte black. That's like the shiny reflective black. Looks like my kind of Cybertruck, if I were to say so myself. It's also being reported that Tesla's made significant detection improvements to hands-free trunk. You can now exclude your home location when enabling hands-free trunk. Tesla's also introduced the hands-free frunk feature for certain models. It says open your frunk when your hands are full, stand still in front of your frunk with phone key unobstructed, and listen for the chimes, and the frunk opens on its own. Rosenberg on X writes, this is starting to look a lot like a replay of 2000, including the investor complacency, which to this day remains at an extreme. And this is something I talked about at the beginning of this video, where investors, a lot of firms like Apollo and many others are just in Delulu land, right? Like, can't even acknowledge bad data when data is bad. That is not, someone you want to take cues from. That's not someone you want to listen to. Like, sure, could I be wrong? Could we avoid a recession? Could things be good? Yes. I don't even think the recession's the main problem. But it is the economic data. If it gets worse, investors will price in a recession. So from an equity markets perspective, if you just get data that continues to get worse, which is, I think, a pretty far gone conclusion at this point, that will happen, markets will price in more recession risk and markets will fall. That's it. You don't even have to enter a recession to get a 20-30% decline from here. Now, if we go into recession, it could get worse than that. Markets tend to really price things in. So it's hard to say how much downside we would actually get. But we don't even have to go into a recession to get large downside. Now, before we go ahead and wrap up this video, Tesla stock option activity on Friday was quite negative. You had 46 different trades totaling $13.42 million with a positive order value of 35%. If we take a look at Tesla's short interest of free float, sitting at 2.95%, you have $18.89 billion currently sold short in Tesla stock, totaling 82.06 million shares. And you did have a lot of shorting activity on Friday as well. That's kind of obvious considering the stock was down almost 9%. You had borrowed shares of 4.63 million, return shares of 466,000. So definitely a lot of shorting activity was taking place. Over on StockTwits, sentiment for Tesla is bearish at 43. It was neutral at 47 yesterday, so even over this weekend, people are getting a little bit more bearish. Message volume is high at 55. Yesterday, it was extremely high at 75, and the participation ratio today is high at 55. It looks like 7.51% of stocks fell below their 50-day moving average on Friday, now totaling 44.24%. And really, from this perspective, there's still a lot of downside that you could see in broader markets. Usually when you end corrections, you're between 15 and 20% of stocks trading above their 50-day moving average. So there's still a lot of room for markets to fall from here. CNN's Fear and Greed Index on Thursday was neutral at 46. Closing on Friday, it was in fear territory at 39. The latest AI investor sentiment survey shows bullish investors at 45.3%, neutral investors at 29.8%, and bearish investors at 24.9%. So bulls are dropping, bears actually dropped a little bit, and neutral investors really picked up. And to close out the trading week, the 2- and 10-year yield curve inversion is now positive. Historically, when this goes positive, that does tend to lead to a lot of pain in markets, and over the next couple of months tends to lead to a recession. Whether or not that happens again, well, time will only tell. But it doesn't usually have a positive correlation to markets in the near term. So let me know what you think about this information down below in the comment section. I will just end it off with, if we get a rally in Tesla stock, it could be company specific news. If we do get really good news, that can obviously cause a rally in Tesla. And if somehow the first Fed cut is seen as a positive and the economic data starts to come in strong, that's the bull case from this point forward. Other than that, I don't see really anything that's going to be an upside surprise that's going to cause equity markets or Tesla to move higher. And if you are truly a long-term investor, you want to see Tesla stock fall right now, because this could be one of the last buying opportunities that you're going to get in Tesla. Once we get this fear, this economic fear out the way, recession fear out the way, I mean, rates are going to fall. Tesla's going to have newer, cheaper vehicles coming to market. The robo-taxi is on the near-term horizon. FSD is about to enter the Chinese market, European market. That's going to boost profitability a lot. And overall, Tesla is a lean machine compared to where they were a couple of years ago. These are all going to be big positives for Tesla, at least in the back half of 2025 and especially in 2026. You want to position for this now? Markets price things in ahead of time. So once this fear is out the way, Tesla stock is going to go dramatically higher. Let's just be honest there. That will happen. And if you're not as allocated to Tesla as you perhaps would like to be, this is your opportunity. And I wouldn't squander it, because you may not get a buying opportunity like this ever again, assuming that Tesla does fall more from here. So let me know what you think about all of this information down below in the comment section. Hit the like button as well as subscribe to the channel if you have not done so already. You guys have a great rest of your day, and I will see you in the next one.